Hello and welcome to Dialogue. During a period of limited official China-U.S. exchanges, U.S. Treasury Secretary Janet Yellen has arrived in Beijing for a 4-day visit, following the recent visit by Secretary of State Antony Blinken in mid-June. What is on the agenda for her talks, and what are the key issues right now between the two sides? And what can we expect from talks during this time of decreasing trust and rising tensions? To discuss these issues and more, I'm glad to be joined by John Gong from the University of International Business and Economics, Antony Chan, former JPMorgan Chase chief economist, and Hong Hao, chief economist of a Grow Investment Group. That's our topic. I'm Xu Qinduo. Welcome to Dialogue. John, I will start with you. This is Secretary Yellen's first trip to China, basically 5 years since Trump time as Treasury Secretary. So what's your expectation?
Well, I think it's clear that there will be several topics on the agenda between Janet Yellen and Chinese officials. I think first and foremost is to continue the dialogue about resuming the channels of communications between the two governments. I think overall she is portrayed as someone in the Biden administration representing a voice of reason, a voice of moderation, and I think I totally agree with that. I think look at her background. She's from an academic background. She understands the issue. She doesn't buy into this sort of conspiracy theories. So I think it's good that she comes and visit here. I think in addition to that, there certainly will be issues related to the treasury issues, the macroeconomic policy issues. There's some reports about discussions about Chinese government's continuous holdings and purchase of U.S. Treasury bonds. Reportedly, there's going to be $100 billion on the block to be sold, and certainly from U.S. government's perspective, they would like China to continue to hold these assets. And I think this is my own opinion. I think probably they will also discuss some coordination issues about macro policy. I think the two governments needs to to have this dialogue in the spirit of the 2008-2009 financial crisis, where the two governments really coordinated on macro policies to jumpstart the world economy. We are facing a severe recession right now. I think U.S. economy and other parts of the world, as well as China, I think, are both having some difficult times in the economic arena. So I think there should be some discussions about that as well.
Mm-hmm. Anthony, in New York. So how do you see Janet Yellen's trip to China here?
I think it's a very constructive step for both countries to meet and face-to-face and have frank discussions. I don't think it's a bad thing when both countries try to lower the temperature. We know that in recent weeks, we've seen already that trade is becoming a very sensitive topic. Finance has become a sensitive topic, certainly in the last year or so, and now even technology becoming a sensitive topic. So I think it's time to set some guardrails and make sure that the two largest economies in the world start to get along and start to coordinate a lot better, rather than moving apart, that they move closer together.
Mm-hmm. Well, Hong Hao, if you follow what Anthony has said, he's looking at reversing the trend probably of rising tensions between the two countries, at least in economic terms. How do you characterize Janet Yellen's trip to China?
Yeah, I think Yellen is seen as a friend of China, right? So it's a moderating voice within the Biden administration. So I think people are hoping for more discussion on tariffs, because Yellen has been a strong opponent of Donald Trump's trade policy ever since the beginning, and she actually said that decoupling would be disastrous for the U.S. Economics. So people were hoping for at least some discussion, and I think the tariff review is already undergoing under the review process at the U.S. Trade Office. So if that happens, if we can get some ice breaking in terms of how the tariff is being collected and also harming the U.S. consumer, and also many other economic issues during this trip, then I think it will be tremendously helpful for both countries.
So Hong Hao, you are expecting, specific achievements out of the trip?
I think the market is obviously because tariff has been around for 5 years now, and ever since the tariff has been imposed on Chinese exports, the U.S. trade deficit against China actually rose to record, right? So it actually didn't help the U.S. Consumer goods, and also Yellen actually said that by imposing tariff, it's actually taxing the U.S. consumer, right? So from a U.S. perspective, it pays to remove all the tariffs that is being imposed on Chinese goods.
Mm-hmm. Well, you describe Yellen as a friend of China. That's dangerous, right? If you take into consideration of the U.S. politics nowadays, if anyone who is seen as friendly to China, that's not a comfortable, I would say, like a title probably for especially senior officials now.
Yeah, I think Yellen is a key figure in the administration, especially nowadays. The monetary policy in the U.S. has gone to such an extreme that it's beyond repair. Right, so the balance sheet of the Federal Reserve is like $9 trillion, and also the U.S. long-term interest rate today actually risen above 4%. So actually increase the burden on the U.S. government. So I think Yellen is a key figure in this whole equation, and also she's in charge of the U.S. Treasury, and she has lots of experience with the U.S. Fed as a Fed chairwoman. So I think all of that adds to her credibility in this negotiation, and also adds to her standing within the Biden administration.
Mm-hmm. Anthony, given what Hong Hao has said about Janet Yellen, how influential she is inside Biden's administration in terms of, say, guiding their China policy?
Well, I think she was a lot more influential as head of the Federal Reserve, because that was a more non-political position. She does have some constraints now that she's in a more political position, but I agree that she is certainly viewed as a much friendlier voice for China than other officials. So I would categorize her as being the most non-political of people in the administration right now. I agree, she has actually said that the tariffs are actually inflationary, and so reversing those tariffs would actually lower the inflation rate. That, of course, is less of an argument today because inflation in the United States has gone down, when you look at the consumer price index, from over 9% to below 5%. So inflation has come down, but certainly removing the tariffs would allow that inflation rate to come even closer to the 2% target of the Federal Reserve. So that would be a less urgent argument, but certainly the argument is there. It's unlikely that the United States would remove the tariffs entirely, but I would be very encouraged if somehow she started the process so that those tariffs can be gradually decreased. Because again, eliminating them 1 year before the election is such a political event that it would probably hurt the administration. That probably would be too much to expect. But certainly moving in that direction to lower them gradually would be a positive development.
Mm-hmm. John, go ahead. A positive development, but again, I would point it to this, toxic political environment inside the U.S.
Exactly. I would like to add my 2 cents on this tariff removal issue. I stake out to state that that's not going to happen. The Biden administration doesn't have the political capital to do something like this. As you said, the entire political climate vis-a-vis the China policy or the China issue is totally toxic. It would be political suicide to stake out and say that we're going to, remove the tariffs, even though it makes a whole of economic sense. I truly believe that Janet Yellen fully understands the economics behind this. It's a very typical economics 101 issue, tax incidence issue. Who is paying the tariffs? Well, in this case, Chinese products, the demand for that, the elasticity of demand for that is higher than the supply elasticity. She fully understands this. So American consumers are paying for this, and that's what she said. However, having said that, just Biden, this is not an argument enough to persuade the politicians in Washington, to persuade the American public that this is not something that it would be viewed as being weak on China. It doesn't sell this argument. So I don't think the Biden administration will reduce tariffs at all. However, in the USTR, Catherine Tai might do something to put more products on the exemption list when it comes to tariffs. The administration might do something quietly, sort of in a covert way, but openly. I don't see the tariffs being removed at all, actually, to be honest with you.
Mm-hmm. So, Anthony, given this, what we have talked about, the trip is at the basically heel of what have finished the Beijing trip by the Secretary of State, Antony Blinken. So, are we expecting anything more than say simply opening the communication channel between the two sides? Anything specific, than tariffs, which we have talked about?
I think opening the channels of communication would be a huge accomplishment if they can move in that direction. And remember, when we talk about tariffs, we're talking about opening the channels, opening the possibility that they'll move in that direction, not that they will make a dramatic action, because that, I agree, would be political suicide for the administration to move in that direction. I also am nervous that even some of these quiet movements won't be so quiet, because the opposition, as we're getting so close to the presidential election, will make sure that any movements, however small, will not be quiet. They will be magnified. So the administration has to be aware of that. But again, establishing the guardrails to make sure that the relationship doesn't become even more toxic than it is now is an improvement. And moving in the direction of easing those tensions, I think, will be good for financial markets, and certainly good for the efficiency of both economies.
Mm-hmm. Well, Hong Kong, of course, Janet Yellen talked about responsibly managing this bilateral relationship. And if you look at this list of priorities or list of concerns from both sides, they have different concerns. From the Chinese side, they have their complaints about the U.S. policies in the trade sector, in the tech sector, and the U.S. is reportedly, considering restrictions, of the Chinese access to U.S. clouding service, and also probably outbound investment to China. So, how big a concern is the Chinese side? And how big an issue is that?
Yeah, well, I think we've seen retaliation from the Chinese side, right? So China is imposing export restrictions on two of the rare earth metal that is essential to chip making, and for the producers who is exporting these metals, they have to apply for permission from the commercial department, right? So for permission to export these rare earth metals. So situation is highly complicated, but don't forget though, Blinken has just visited China, and also when he was in China, so he was received by President Xi, and Blinken re-emphasized U.S. is not decoupling from China, it's really trying to de-risk the supply chain. And also, the date today, Yellen arriving in Beijing is actually the exact date 5 years ago that Donald Trump launched the trade war, right? So it's quite meaningful actually. So just now I mentioned about the tariff hope for a sort of a tariff negotiation that may lead to some sort of a tariff reduction in some future days. That is really a really high hope that the market is hoping, right? But then, at times like this, I think one has to stay optimistic, so to see through, how the bilateral relationship is going to develop in the future.
Mm-hmm. John, what's your take of this latest move by the Chinese side to impose restrictions of export on the two metal, minerals people say are critical in chip making?
Well, I think this is a very limited and also very measured response to a slew of sanctions, essentially, technology sanctions against China. You look at the Commerce Department of the United States putting hundreds of companies on its entity list, imposing sanctions on Chinese companies, restricting the sale of semiconductor products, and all of this has been done for at least half a year, I think. And finally, there is I would say a fairly limited response, a pushback a little bit from the Chinese government to say, look, enough is enough, that we also have things in our tool that we can respond to the kind of thing you are doing, right? So I think, but honestly, I don't see this being, really effective in stopping all of the behaviors coming from Washington. Probably it's a
reminder.
It's a reminder. Yeah, it's a reminder that if things keep slipping along this slope, you're not going to be very comfortable. I think that's probably the message here. And from what I read, I don't think this measure will stop the semiconductor industry in the United States and other parts of the world, when for using these products, it's just going to raise the price more. It's a little bit more costly, but that's still a fairly effective message, I think, a signal, I guess. So we have to see, what's going to be coming from Washington in response to this, and hopefully they get the message, I guess.
Mm-hmm. Anthony, so the Chinese latest export control of the two minerals in terms of chip making. What's the signal? How is that seen in Washington, for example? Is that simply a reminder that we also have tools to fight back, or is that a specific countermeasure against the U.S. chip ban, export ban to China?
I think that right now, with the restrictions on the metals that I think you've mentioned, it's viewed as a negative development, but it's, again, part of the process. And I think that the Chinese and the United States understand that when you are in sort of a heightened tension, all weapons are available, and whether they're economic or trade weapons, they're available. And I think the United States and China both understand it. And I think Janet Yellen's trip is meant to ensure that those things somehow do not get out of control.
Mm. Well, Hong Hao, earlier you mentioned about, this is the date. Janet Yellen arrived in Beijing 5 years ago. Donald Trump started the trade war against China. Okay, 5 years now, the war is continuing, unfortunately.
Yeah.
But remember, before that we had this strategic dialogue every 6 months. That's rather frequent. I mean, encounter meetings between economic policymakers between the Chinese and the Americans. So is there any possibility that the two sides could resume such frequency of meetings, of dialogue?
Yeah, well, I think there are, chances, and one has to be sort of optimistic about it. Reason being, I think by now everybody realized that the world economy is going into a down cycle, right? So the U.S. Monetary policy has been extended to its extreme, and there's very little leeway for the Federal Reserve to do. And Powell actually saying that he's going to hike two more times. So in this sense, for the global economy to avoid a recession somewhere down the road, two of the biggest economies has to work together, right? So, so China can contribute a lot, to global growth, when the U.S. slow down. So I think, it pays to sort of re-engage the two parties into economic dialogues with each other. So I think, the market is also hoping, with Blinken's visit and now Yellen's visit, there's some ice breaking going on, and then the two sides will resume talking in some future days.
Mm-hmm. Hong Hao, of course, when people talk about the China-U.S. relationship, in particular from Washington's point of view, China is the chief, strategic rival, politically, diplomatically, and in particular geopolitically. But now you are talking about basically economic reality for the benefits of cooperating with each other?
Yeah, I think even Yellen herself, is seen as seeing things in a economic sense, right? So she's approaching it from an economist point of view rather than a politician point of view, and I think that is making her as one of the sort of a more moderating voices within the Biden administration. So I think by now, with the pandemic, 3 years of pandemic, all the countries in the world, not just U.S., not just China, I think Europe as well, all the countries in the world that has sort of suffered 3 years of slowdown, and now we're trying to rebuild. And so I think re-engaging both parties, two of the biggest economies in the world, would definitely help the global economy to avoid a sort of a deep recession down the road.
Mm-hmm. Well, Anthony, can we say Secretary Yellen is a bit different from her colleagues in terms of seeing this relationship from what perspective? Economic perspective, or strategic perspective, or political perspective? So probably you draw different conclusions. You will pursue different relationship.
I agree. I think if you look at her entire career, not just during her time with the Biden administration, she has been the voice of reason. So I think that is why this is a refreshing and a worthwhile trip for Janet Yellen. The question is, how much can she do in an environment where the tensions are so high? I think there is very few people in the administration that understand the importance of the economic relationship, as you've heard from your other guests, between both China and the United States. And in fact, they both have two different scenarios. In the U.S., people have been expecting a recession for the last 2 years, and yet the economy continues to chug along. In fact, even in the second quarter of this year, we're expected to grow pretty close to potential, close to 2%, which is pretty good, given the fact that for the last 2 years in the United States, people have been expecting a recession. And in China, the good news is that you have very low inflation, which means that there's opportunity to stimulate the overall economy. You have that luxury, which the United States does not have because our inflation rate is much higher. But at the same time, economic growth seems to be slowing down. So both economies have some challenges. And when you have two economies, especially the largest ones with challenges, the best way to solve those challenges is to somehow increase cooperation.
Mm-hmm. Speak of the challenges, John, the Goldman Sachs downgraded several Chinese state banks, for their exposure probably to the local with the debt issue. Mm-hmm. And how big, a problem is that in terms of the Chinese economic performance?
Well, I think this is not political. I think this is, truly a commercial activity. Mm-hmm. It's a fact that China's real estate is facing some problems, and with the much larger exposure of debt to this sector from the banks, it's expected that the downgrading is happening. I view this purely in an isolated commercial realm, not so much of a political thing. I do want to point out one thing regarding your previous question about Janet Yellen, though. I think I do appreciate one time she made the statement that what the United States has been doing, imposing sanctions, put companies on entity, is purely motivated by national security, as opposed to trying to gain a economic and technological supremacy. That is a distinction she made. I think that's a very good point, though. Mm-hmm. I really appreciate she has that view. However, but the distinction is very difficult to maintain, especially in the context of some politicians and people like Peter Navarro, for example, have been saying that economic superiority is national security. There are people in the United States promoting this view. So I think even though she has some sensible views about this issue, nevertheless, I think her influence within the Biden administration is quite limited, and I think she has a tough time to persuade these Cold War-minded people, these national security people.
Exactly. Now, if you look at the remarks, statements by other officials, for example, Gina Raimondo, once she talked publicly, the U.S. purpose is to slow down the Chinese innovation, slow down the Chinese high-tech industry. Yeah, this is a zero sum. How can you reconcile?
Exactly. I think it's a totally different mindset. I think Janet Yellen overall, I still want to emphasize that she's an academician. She came from academic background. She's an economist by training. I mean, when I was in graduate school, we read her papers actually. So she views things probably more from an economics perspective. Well, these people, you mentioned Romando, for example. These people are, in the national security community. These people are, these people have been, plotting for, United States taking actions around the world, maintaining U.S. dominance, this kind of activities for a very long time. So I think it's a totally different mindset. They don't talk to each other. I don't think they can be on the same page when it comes to issues like this.
Well, Anthony, obviously, I mean, national security is understandable concern about that, economic security. But, for the Chinese side, they have expressed their concern, quite frequently, that it cannot be abused, such a concept. And besides, it's very difficult sometimes to define, what exactly is the security in terms of economy, in terms of technology, in terms of the national security here?
Yes, the term national security can be abused. In fact, during the prior administration, at one point they talked about imposing tariffs on Canada for various raw materials because of national security, when Canada clearly is a friend of the United States. So you can see that that's one form of abuse. The good news is that Peter Navarro is not part of the administration, so those voices are there, but they're not inside the administration right now. Janet Yellen, yes, she is an academic. I remember when I worked at the Federal Reserve in Washington and met with Janet Yellen many, many times. Her views have always been academic in nature, and they have not changed, even though she's in a more political position today. But I trust that she will be bringing that form of academic thinking, which I define as unbiased thinking, into the discussions. And I think that will be welcome, not only in China, but by other people that take this topic and this issue in a more unbiased and more on a more economic footing. And I think that that's why the visit is crucial. But keep in mind that it's taking place in an environment where there is quite a bit of political toxicity between both countries. So there's only so much she can do, but I can assure you that she will try her best to make these discussions as fair as she can, given her constraints.
Well, Hong Hao, of course, we talked about politics, talked about the economic relationship, and if you look at the trade between the two countries, for example, 2022, it's a new record. The people say in 3 years in a row that there's an increase in bilateral trade. So what does that say about this economic relationship?
Yeah, well, I think the trade deficits that the U.S. has against China, keep hitting records high, right? So it's quite interesting to see, under a tariff regime, you actually, incurring a bigger trade deficit against China. I think, that really shows that China is at the heart of the global supply chain. So even now, there are efforts to sort of move away to create the second supply chain center. But I think the Chinese manufacturing competitiveness is very difficult to be replaced. So I think going forward, having enjoyed such a huge trade surplus that China has, the Chinese foreign currency reserve has to be better managed. Besides, investing in some U.S. the U.S. Treasury bonds, maybe we can look at other higher yield alternatives that give us better returns.
Well, with that, we come to the end for today's discussion. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.